If we could just touch on that fantastic performance last week, and not only last week, for the full month of April, we actually seen the market gaining around 6%. In fact, it's the first month since the beginning of the year that we're seeing a lot of positive momentum, and that's really due to the fact that we're seeing a lot of the companies coming out with results, banking sector being the biggest focus. Do you think that we can actually sustain this upward momentum and see returns, starting to pile up as we head towards the year? Or do you think that we could actually land up, experiencing a lackluster performance in 2012?
Thank you very much for having me here. As you rightly said, we've had like some returned, investors' interest in the Nigerian equities market. And as you rightly mentioned, today we have about 6% gain. And on the back of this is, the banking stocks contributing very heavily to this gain. And because why? Because the banking stocks are highly capitalized stocks, and anything that happens to them, of course, does, give the market some impetus, writes them on. And concerning whether we'll expect this kind of trend going forward, yes, I think we will have it, of course, with some profit taken along the way, but you must understand again that it's even very interesting for us to note that the Nigerian capital market, Nigerian equities market in particular, is reacting to what it should react to normally, which is earnings, good dividends, earnings, good prospect for the companies, and these companies are coming out with results. We're in the earnings season. The market is reacting to it. We never had this before. There was so much apathy in the market, but the market is beginning to say that, okay, look, like we're getting out of the waters. The future is better than the past, so let us just, be positive. Fine, a lot of money is still going into the fixed income market as we've always had it, but all the money is not going as it used to be. Now people are beginning to become interested in the equities market, and we expect this interest, this return to continue in the medium to long term. So
Jide, we've been waiting in anticipation for First Bank results. First quarter of this year showing 102% year-on-year growth in earnings. So this is a good number that we're speaking of, and again, this was the make or break company. Again, we're seeing first quarter growth being quite good. Full year 2011 numbers for the majority of the banks didn't look that strong. The point is that going forward, can we actually expect a very strong performance? And of course, impairment charges is also a very big focus for investors out there.
Concerning the banks and concerning what you just mentioned for the full year 2011 for the Nigerian banks, it was surprising to most people, to the investing public and analysts, because nobody anticipated that the banks still had such bad debts, toxic debts in their books. But eventually, it was revealed to us. But thank God again for AMCON, thank goodness for AMCON, because AMCON has shown that it has a strength and capacity to help to bring stability to the financial system. AMCON was able to take care of this bad debt. And of course, despite that, the banks still gave reasonable dividend, and that is, okay, of course, a positive on the part of the shareholders. Now, in particular, First Bank result, when I first saw it today, it was like, oh, well, this is good. This is very outrageously very good. But again, I went to the numbers and I discovered that First Bank. I remember I was in an investor conference, investor forum with the chief risk officer of First Bank about 2 years ago, and she clearly said that First Bank would rather keep its money with the central bank and earn the standing deposit rate of the central bank rather than creating risky assets. Why? Because it was very unsure about the future. It was very uncertain about the future. But when you look at it between 2009 financial year and Q1 2012, which is the latest result, First Bank has grown its loan book, its gross loan and advance has grown about 147%. Between 2009 and 2011, it has grown by 66%. Between full year 2011 and Q1 2012, it has grown about 47%. So, well, interest income even grew by 50% in Q1 2012 result. So with a company that is becoming more appreciating risk and ready to create risk assets, growing its gross loans by that quantum, well, it's not expected that the company is in for a good future. And again, I must add that Nigerian banks are sitting on huge deposit, and the only way for them is to create risky assets because they're in the primary business of creating credit and expanding credit. And without such quantum of growth in gross loans, interest income can only double. So I expect this for other banks as well. And if you check across all the banks, you see that their expectation about the future is better. The AMCON is the books are cleaner, as I'm saying, and AMCON has shown the capacity to come in and make things work. So going forward, I expect us to see, this kind of strong showing. Of course, there may be a slowdown in earnings because of uncertainty and unforeseen bends, but I expect these numbers to continue to be. So
let's take a look at Access Bank because we saw net interest income increasing by 188%. And again, just pretty much reiterates the point that you were talking of, is that most banks are just pricing in a far better, environment going forward. Obviously, we're not going to expect numbers like this to continue because now it's off a more stable base. But again, you know, a very optimistic environment that could play out.
Yeah, the environment is optimistic for me. You know, if you look at Nigeria, there's so much huge potential for growth. I'm one of the people that believe that with the right mix of policy and government direction, that things cannot be better for everybody, both for the banking sector and the real sector. There's so much good opportunity in real estate, in oil and gas, in transport, in power, and all of this. So the future is bright. The future is going to be excellent. The banks are getting out of their risk aversion. They're ready to take the future is in their hand, and the only way to go is just for them to create risky assets. And you can begin to see that. You can see that in the interest income. Interest income is returning back very strongly. So I expect that you know, to go on. Of course, I'll be cautiously optimistic because of this insecurity in some parts of the country and possible political instability. But that is far-fetched anyway. Based on these numbers, based on the projections of the future, based on industry statistics, based on industry strength, based on industry's analysis, I think these numbers will continue to show strong.
Okay, so I mean, we're talking about a very positive outlook for the banking sector. So let's just touch on Guinness Nigeria, which was out. And modest numbers on the turnover front. I mean, we only saw an increase of around 2.5%. Profit before tax down 24%. Profit after tax also down 24%. These are not great numbers that are coming through. And again, this is just, you know, perhaps quite a disappointing result, given the fact that Guinness Nigeria has actually been faring well, even during the bad times.
Yeah, for Guinness, the result is disappointing, as I've said. Just about a 2.5% growth in turnover, a 24% dip in PAT, in profit. But again, you know, I tried looking into the numbers and I went back into history and I saw that Guinness had the same trend of result on quarter-on-quarter between Q2 and Q3 in 2005, in 2009, and again, this same trend. And at the end of the year, they will just close the PAT marginally up. By the end of the year, they'll still pay dividend. Guinness is the dividend-paying stock. It has a lot of interest from institutional investors, from portfolio managers. The factors that drive Guinness are beyond those numbers. And if you check the cash flow statement of the company has very robust cash, very, very robust cash. Well, when we get a full year audited account, maybe we'll be able to have more insight into what happened. But I just see from historical trend, that is not the first time that's showing such disappointing results. At the end of the financial year, they're going to declare dividend. People are going to, the shareholders are going to smile home. So I think it's more driven by the cash position. The cash position remains robust. The cash position remains very positive. So people just still believe. I believe that they will still pay dividend. Maybe that's what's just driving it. Maybe they're just taking position. You know, and it's a very thinly traded stock anyway. People are just taking position, realigning portfolio, take advantage of that. Aside of that, the disappointing result, you know, for the public, for the shareholders, the whole trend will continue. They will still pay dividends.